back with first trades right here on ET Now. Not the best of numbers for Justdial, and it was clearly showing in the stock since morning. 7% down, now at 728. So not the prettiest of days for Justdial. The numbers, I think, it's just a continuation of string of bad performances that is leading to Justdial underperforming severely, now trading at a fresh 52-week low for itself. So no, not good going for this one, and doesn't seem like the going will become better in a hurry. So let's get in Ramkumar Krishnamachari, who's the CFO at Justdial, to speak about the numbers. And Ram, my question is simple. Your numbers have come in below expectations on all counts. Would you be able to attribute the tepid growth in volumes to after rationalizing pricing? What would you attribute it to?
It's the continuation of the issue that I had articulated in the Q2, is that essentially we should have we are at least around 3 quarters behind as far as scaling up of the business is concerned. What we are today being affected is that the growth in volume has not happened to the extent that we should have, which is what we are addressing today, is the expansion of the sales force both in existing and newer geographies. So you will see that we are going to be adding about 2,000 to 2,500 sales force in addition to the 6,000 that we already have over the next 9 months. So you would see the growth rate bouncing back. So currently we are impacted by the volume, which is what is impacting the growth, and the course correction has already started, as I had said in the previous quarter.
Right. But it's not just about a quarter or so. Your core business, core search business rather, has decelerated over the last 5 quarters. Even paid listings growth was disappointing for a second consecutive quarter. What explains the extending weakness? And are you still hoping for 20% plus growth in Q1 FY17?
Not by Q1. I mean, it's very difficult for us to. The turnaround you should see in Q1. So the upward trend you should start expecting in Q1 onwards, FY17 onwards. Now, it's very simple. We have to expand scale. That's the bottom line. The volumes are going to come from expansion of the sales force and scale. Right now, what we should have been, we should have done this at least a year back. All this expansion, probably we would I would be speaking a different language today. But nevertheless, we have identified what the issue. We dropped the ball on execution as far as scale is concerned. We have already taken corrective action. You should see the impact of those action coming in from Q1 onwards. So it's not that I can do it in turnaround in 1 quarter. It takes time for the sales force to come on board, start producing. So it will take at least a couple of quarters for the impact to really be visible on the numbers, both in actually overall in the volume as well as in the sales growth.
Well, your headcount too, Ram, has dipped for a second consecutive quarter. So what's the sales and hiring plan to get more feet on the street to arrest the deceleration in core search business?
So the drop in numbers is primarily be on the service or the IRO team or the people answering calls, because the call volumes are more or less stagnant. So we have not replaced the attriting numbers there. There's been some, bottom performance fishing out on the telemarketing side. But overall, the additions has been there on the feet on street. So the steps have been taken to significantly or double the existing sales force count on the feet sales force, which is the cold call team that we have, and then up by about 50% the telemarketing executive numbers. So overall, you will see that monthly addition should grow by about 200 per month, or say over the next 9 months to 12 months.
Right. Ram, we know Search Plus is ready, but definitive dates have not yet been communicated. What's the update on its commercial launch, and when will its ad campaign start, and have you reworked an ad spend plan?
The ad campaign should start this quarter anytime. The product is ready. We were waiting. We want to make sure that the product is ready for ordinary Indian homemaker to perform transaction on mobile. So we are happy with the product that we have. and you should see us start spending on the advertising this quarter onwards. We still maintain that we are going to spend the 100 crore for the sort of mass communication reach that we're going to start. So we maintain that. That should happen in the next, the whole entire 100 crore will be spent over the next 3-4 quarters.
The tepid growth and the lower realizations have weighed on your operating profitability as well. What's the outlook on the EBITDA margins?
So the margins have been impacted this year primarily due to lack of top-line growth, as simple as that. And the growth, the margin should bounce back to the levels of 16 once we started get into the normalized growth rate, which we anticipate anywhere between 20-25% top-line growth. So once that comes back, the margins will bounce back. So what we have seeing right now on the margin is directly an impact from the lack of top-line growth.
Right. So, Ram, how would you guide for the top and bottom line growth in FY17 then?
We should see the 20-25% growth that we have been seeing in FY17. We are quite confident that we can come back into the 20s, the growth rate, both on the number of campaigns as well as on the overall growth rate. So once you see that happening, rest of the margin and other thing will fall in place.
Okay, Ram, we'll wish you all the best for that. Hopefully you manage to reach this kind of growth numbers that you're projecting for FY17. We wish you all the best for that. Thanks for joining in today. The market isn't quite buying that though in today's session. The commentary or otherwise, and string of disappointments leading to this fall. 7% off. The core business isn't quite doing well. The biggest hope, which is Search Plus, isn't quite really raking in. I mean, frankly,